Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Wednesday, October 12th, 2011 is brought to you by Realtik. All right, guys, let's get into the mix. The markets are floating higher today just by a little bit, but we are running into a major resistance, which I want to speak about right now. If I zoom out on the charts, take a look at this green line. See that we tagged it earlier and we just retagged it again, a little bit of an intraday double top. If I zoom out, take a look at where this line comes from. I think this is amazing. You have to always be watching the charts to see this type of thing. If you look back here, the high on the 16th of September and a double top high on the 20th of September. That is exactly what we just ran into. So again, in a short-term basis, this actually should be decent resistance right up in this range, and it must be watched in terms of whether or not the markets can break through this level or break down below this and continue to hold and pull back off of this level. And again, if there's one level to talk about in today's video, this is the level you're watching, as again, major resistance up here from September 16th and September 20th, re-hitting it today on October 12th. Now, if we zoom in again, you can just see again what's gone on today. The volume is dead. Volume all week has been very, very quiet. Monday, the bond market was closed. That was a good excuse for why the volume was quiet on Monday. Tuesday, we were waiting on Alcoa's earnings. Today, we were waiting on the Federal Reserve FOMC minutes. So each day, they're finding some excuse to keep the volume very, very light, and essentially, you have to wonder what that means. And when you see volume that's very, very light, and again, we're coming from a week last week where we were doing probably around 350 to 450 million per day. We're now doing about 200 million. So again, volume is almost in half this week compared to last week. And the question you have to ask yourself is, all right, what's the meaning of this? And the only thing to summarize from all of this going on is that volume being lighter means less institutional participation. And again, if you don't have institutions buying this rally, what's wrong here? What are we missing here? Why is the market not, necessarily getting the institutional involvement that it should? And I think that has to give us all pause here. And yeah, the markets are up 12, 13% in the last 1 week period, which is an amazing run. But again, you're not seeing institutions buying into this rally yet. And I think that's something that has to be monitored very, very closely. Now, again, when you look at the facts, I can't blame them for not buying in, frankly. And then, again, if we go to the 60-minute chart, I'll show you on the 60-minute chart. This is the same level right here. Your pivot top from the 16th and the 20th right here, stretching out to today's highs. But again, if you look at the facts, I mean, yeah, there's been a big rally over the last week, 12, 13%, on the back of hopes of some sort of bank recapitalization plan in Europe. But the fact is there anything written in stone yet? The answer is no. And when you say to yourself, well, has Greece been fixed? Has Italy, Ireland, Portugal, Spain, you name it, have those countries, has anything been fixed in those countries? The answer is no. So again, it kind of puts yourself in a position of, well, then are you just seeing the shorts getting whipped out here? Is the Federal Reserve involved here on the light volume, pushing this market up, trying to get the markets up before the next drop? Are the institutions just waiting for the next drop and ultimately shorting into that drop? I mean, there's a lot of questions that must be asked here, and it does bring about some interesting conclusions when you think about all those factors that we're seeing out there. So again, even though it's been a fantastic rally, I do have to say you have to be cautious here because again, nothing's in stone yet. Yeah, ultimately, yeah, maybe they recapitalized the banks like the U.S. did in TARP in 2008, 2009, but really at this point the market's factoring that in. And we've often seen with the Federal Reserve and their announcements when the market runs up, you may have a sort of sell the news type effect, especially if the bailout or the recapitalization is not as bullish as everyone had hoped for. All right, let's go to the daily chart here, folks. And again, one thing of interest on the daily chart is the move above these two trend lines today. And again, we're hitting this level right here, which is exactly the level I showed you on the intraday. This is the daily SPY, which mirrors the S&P 500. But on an intraday basis, or on the daily chart here, this level was taken out today, which is, if we confirm this tomorrow, that would be significant to me. It wouldn't tell me we're going to go higher, but it would tell me that pullbacks probably would be a buying opportunity instead of an overall short move to the downside that would be a shorting opportunity. All right, so again, really what you're watching here tomorrow, and tomorrow's going to be the key day that I'll be analyzing to my members. It's a matter of what do we do with this move? Do we reverse it? Do we come back down? Do we not confirm it? Or do we confirm it, in which case pullbacks are buying opportunities instead of basically looking to short for the next big drop? And that, again, will be all in stone as of tomorrow based on the conclusion of tomorrow's trading day. And again, we'll get a better sense of that. Right now, the markets, again, what a move up. The spiders hit a low of 107.43 last Tuesday. Today, we hit a high of 121.95. And again, that's almost right around the 13% move marker from the lows of last Tuesday. Tremendous rally any way you cut it. All right. Let's take a look at the dollar today. Dollar's getting hammered. The dollar's right on the 200 moving average though on a daily basis. So we have to think that the dollar is coming into some good support. Yeah, maybe it goes a little bit lower, but ultimately I would think the 50 would be the lowest point on the dollar, and I don't even know if it's going to get there, to be honest. The 200 moving average is significant support here, and again the 50 is slowly sloping up, which will get closer and closer. So again, you have to think that the rally is running out of steam up here, even though again it's a decent day to the upside. Dow's up 175, Nasdaq's up 38, and S&P's up about 20. It's about 1.5% averaged out, which is a great move. But again, the question is how much more is in the tank? You know, when you run 13% up in 1 week's time, how much more can there be before at least you see some sort of pullback? And you have to be on the side of caution in terms of longs right now and thinking that the market at least needs to pull back before next leg up if that's going to be the way it goes. And again, I'll know tomorrow based on tomorrow's information whether or not it's going to be a big pullback or a small pullback buying opportunity. Big pullbacks, we want to look for shorts and continue to short the market. If it's just a small pullback, then you look to buy the market on that pullback. All right. Looking across the board, guys, keep an eye on JP Morgan. Let's go to some intraday charts here. JPM, let me punch that in here for you guys. There's your JP Morgan chart. JP Morgan is hovering near the highs of the day. This stock, again, is the leading stock that you want to follow. If you're looking for something to follow in terms of what the market's going to do, this is your stock. All right, and again, JP Morgan, beautiful move up today. Again, it's not having a huge move up, but it's a solid move in the range of about 3.5% for JPM. That's a pretty solid move. Goldman Sachs up 3.5% as well. Financials, again, are leading, and that's why, again, until you see the financials fall and start to lag the market, you have to assume that the market will stay strong. Financials are the essence of this. And again, they're running up. Why? Because of the bank bailout recapitalization in Europe, which again will trickle through to the U.S. banks. Just like in 2008, 2009, the Fed literally pushed $1 trillion to overseas banks. The same thing will ultimately filter through to the U.S. banks with the recapitalization. So again, it's important to recognize that as well. All right. Now, the other thing I want to talk about here, we have to look at a couple other stocks today. Number one, Apple Computer. Apple Computer, beautiful little move up today, but it has fallen. In fact, Apple's near the lows of the day here. The reason why Apple's at the lows of the day, take a look at this. This little pivot top right here. Pivot top, pivot top. Look at the high of the day on the daily Apple chart. Right to that pivot point. All right. So again, keep an eye on that. That was a little bit of a level there. We talked about that, I believe, last night in the nightly video and today in the chat room. In addition, Amazon's having an okay day, up 1.5%, kind of in line with the markets. Google's up about 1.5%. I mean, pretty much everything's green out there. Research in Motion is in the red. One stock I did go short today, folks. I'll give you guys this one because I'm already in the money significantly. Was MasterCard. Let me explain what's happened with MasterCard. Now, MasterCard, I shorted at $341 back about 2 to 3 weeks ago, and I made about $40 on it, an average of $40 to $45 overall in the play, as it fell to just below 300, where I moved out of my short. Now today we saw MasterCard trade back into the same breakdown line that had given me the short originally. And for those of you that know and how to track levels, you know that if once you break a level of support, it becomes resistance, and you can actually short the move back into that level. And that's exactly what I did today, and I want to show you that right now, folks. All right, what I'm going to do is I'm going to draw that line on the charts. What you basically do is connect these lines. See these lows? Pivot low, pivot low, pivot low, pivot low. This was your breakdown originally. And again, I shorted just up here, seeing the bear flag there, so I got even in early on that. My cover price was right down here, and I've been patiently waiting for it to go all the way up, and at the highs today, I reshorted it. And that was at 336 and change. Right now, it's at 329, so already about $6+ in the money on that short just in one intraday period on the MasterCard short. And again, notice how just by reading the charts, we give ourselves the advantage of a 90% success rate trade. And that's all you're going to get. I mean, you can get a 90%, you're going to be banking millions of dollars over the course of your lifetime, if not in a year. It all depends on how much money you're trading with, but that's the key right there. And again, MasterCard trading right around 929, 930 right now, down about $6+ from that shorting opportunity. I gave that out to Research Center subscribers this morning, and again, we'll see if that continues to pay us off. Once I'm in the money 10 points, I will be putting a break-even stop in, and then it can't go against us, obviously. At that point, we'll just ride it down. And again, if the market does pull back a little bit, this should come in very nicely, and we should bank some good funds on it. All right, I just wanted to show you that play because I think the retracement is a very intricate detail that most traders, believe it or not, do not know about, but it's one of the highest percentage shorts you can do in the market. All right, guys, come join the free trial here at the Research Center at InTheMoneyStocks.com. Take the chat room, the Research Center 7-day free trial, no obligation. Come join, start learning from the pros, profiting with the pros, and becoming part of the elite group that is now taking over the markets in terms of trading and profits. All right, you're a swing trader, investor, day trader. We have it all here. Come join us, start making money. Take care.